Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 stocks that top analysts have a 100% success rate on. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're taking a look at 3 companies that top analysts just recently reiterated a buy rating on, plus have a 100% success rating. We're going to take a look at these companies, what it is that they do, and of course how those Wall Street analysts are weighing in on the stock's future. Don't forget you can download the TipRanks mobile app to access the wisdom of thousands of analysts on the go by following the links in the description down below. Now let's get right into these stocks. First up, we're looking at top Wall Street analyst Quinn Bolton, who comes in number 1 out of all Wall Street analysts with a success rate of 74%. Now, just yesterday, he came out with a buy rating on Monolithic Power. He has rated this stock 55 times before with a 100% success rate. Monolithic Power trades under the ticker MPWR. And it's currently priced at $533 per share. Now, over the past year, they are just up 6%, but year to date have seen growth of 56%. And in this past week, they did take a bit of a dip here. Monolithic Power is a global company that provides high-performance, semiconductor-based power electronics solutions. Their mission is to focus on providing ease-of-use power solutions in cloud computing, telecom, industrial, and automotive market segments. They've become a technical leader in integrated power semiconductor and system powers delivery architecture in the world. Now, what recently spurred some reiterated ratings from analysts was their earnings report earlier this week. They did come out with an earnings beat and revenue in line with expectations. Revenue of $441 million did decline a couple percent year over year, but as I said, was in line with estimates, while their earnings per share of $2.82 came in just a couple cents ahead of expectations. During their recent earnings call, their CFO did note that the lack of short-term visibility has made forecasting beyond the third quarter more difficult, but that their business fundamentals remain unchanged. And in the last few years, their revenue and customer base have expanded tremendously, particularly amongst Tier 1 accounts. They believe they've solidified their market share gains by delivering quality products and services, and that they have a strong design win pipeline, which positions them well for future growth. And it seems analysts would agree. We have nothing but buy ratings coming in following that report, with several analysts increasing their price targets. Overall, the stock comes in as a strong buy with 10 buys and 2 holds and an average upside of over 9%. Taking a look at those recent ratings, we can see our number 1 ranked analyst here, Quinn Bolton. He gives the price target of $575, which would be an upside of 7.7%. And many are in a similar range there, from 5 to 12% upside. Next up, we're looking at a recent rating from top analyst Mark Lipicus. Mark currently holds the number 3 position out of 8,500 Wall Street analysts and a success rate of 75%. And just yesterday, he came out with a reiterated buy rating on Rambus. Now, he has 10 ratings on this stock with a 100% success rate. The Rambus stock trades under the ticker RMBS. Their stock is currently trading at $54 per share, and they've seen massive growth this year. They're up 106% and 22% in just the last 6 months. However, looking at this week, they did take a drop off on July 31st. Rambus produces industry-leading chips and silicon IP, helping make data faster and safer. Their products and innovations enable critical performance improvements for data centers and other growing markets. Their solutions improve data bandwidth, capacity, and security from cloud to consumer. They're seeing an amplified opportunity in data centers as memory relevance accelerates, fueled by AI. Now, as you may have guessed, that drop-off in their stock earlier this week was linked to their recent earnings report, where they did come in just shy of analyst expectations on earnings. For their second quarter, they reported earnings per share of 38 cents, coming in 1 cent shy of analyst expectations, and they reported revenue of $119.8 million, which was in line. They noted that by delivering the critical chips and IP that address the growing demand in data center fueled by AI, we are well positioned to drive the company's long-term profitable growth. Now, their stock has not gathered as much attention from Wall Street, currently only having 3 analyst ratings, but they all do come in with a buy. And those buy ratings come with an average price target of $70, which would be an upside potential of about 30%. Taking a look down below, we do have our top analyst Mark here, who gave it a price target of $66, which would be an upside of 22%, and he's actually the lowest. We also have a 5-star analyst from Susquehanna coming in with an upside of 38%. And our third top analyst is Christopher Rowland from Susquehanna. He is currently ranked number 6 with a success rate of 74%, and just yesterday he came out with a buy rating on Lattice Semiconductor. He's rated the stock 56 times before with a 100% success rating. But also, if we jump back to Mark, he also recently came out with a rating on Lattice Semiconductor and also has a 100% success rating with 20 past ratings. Lattice Semiconductor trades under the ticker LSCC. Their stock currently trades at $91.70 per share, and they have seen impressive growth of 44% this past year, up nearly 10% in the last 3 months, and fairly flat over the past week. Lattice Semiconductor is clearly in the semiconductor industry. They design, develop, and market programmable logic products and related software, and the company includes semiconductor devices as well as evaluation boards, development hardware, and related intellectual property licensing, services, and sales. They have become the low-power programmable leader, solving customer problems across the network from the edge to the cloud in the growing communications, computing, industrial, automotive, and consumer markets. And this probably doesn't come as much of a shock, but Lattice Semiconductor also shared a quarterly earnings report this week. They reported Q2 earnings per share of 52 cents, coming in 1 cent ahead of analyst expectations, and their quarterly revenue did grow 18% year over year, coming in at $190 million, beating expectations by $2.76 million. Their CEO noted that they're driving the largest product portfolio expansion in the company's history, which continues to create strong customer momentum. Their CFO also said that their Q2 represented their 13th consecutive quarter of sequential growth. Their stock currently has 6 analyst ratings coming in as a strong buy, and several top analysts increasing their price targets this week. I would say the average price target comes in at $105, but if you take a look, actually all of our price targets come in at $105, which would be an upside of over 14%, and we see those all down below here. Now, some of them did increase from these top analysts in the last couple of days. So there we have 3 stocks that all recently had buy ratings reiterated from top analysts who have a 100% success rate on them. Let me know your thoughts on these 3 companies in the comments down below and what you think of their future growth potential. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are up to and providing some information and entertainment. So please always make sure you do your own research and due diligence. Thanks so much for watching. Have a wonderful day, and I'll see you back here next time.